Hello, 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 everyone. Mike Arnold's here, co-founder of Path Trading Partners, along with Bob Iacchino. How is everyone doing this fine Sunday afternoon / evening, depending on where you are in the world? Hope everyone had a great, fantastic weekend. Good afternoon, Davey. Hello, Patrick. Good afternoon, Christoph. Welcome as always. Hey, Lauren. Hello, Anissa. Hope you had a wonderful day as well. Hello, Options 22. What is everybody doing here on a fine Sunday? By the way, I recorded the weekly sector overview. It's up, but it's still rendering the HD version. So if you want to tune in after this, or, if you're late, if you're in Europe and you want to watch it first thing tomorrow morning when you get up, that would be wonderful. And by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Come back after this live stream and leave me some comments, please, to get us wider distribution. All right, got that out of the way. Switch some cameras. By the way, I'm going to be trying some new backdrop things when I'm wearing different colored tie-dyes for the summer, so we'll have to see how that works. But not today, because I'm wearing a gray one. So we're all good. By the way, so tomorrow, durable goods at 7:30 before the market opens. Could have some minor movement on it. And then we have some pending home sales. Dallas manufacturing index, that'll be interesting. The previous was minus 7.5, so it'll be interesting to see if that bounces back or stays negative. Tomorrow is not the biggest day this week. Tuesday, we have, again, stuff at 7:30, good trades balance, retail inventories. So it'll be interesting to see if those are climbing or not. Bigger after the market opens is consumer confidence. Right before, it's still house price index, but, that's probably going to come back a bit. But that's not going to be earth-shaking since everybody's expecting the short-term top to be in housing, or maybe a medium-term, or maybe a longer-term top. But consumer confidence will be very interesting to see. It's going to forecast to be down from prior, so do not ignore Wednesday. And remember, we're getting into quarter end. Wednesday's the 28th. Thursday, the 29th, when we get Fed speak again. Final GDP for this is still for Q1. This is the final one. Remember, they go through a couple revisions, and it is forecast to be negative. Don't mistake that with quarter two, though. This is quarter one. Okay? Then we got Powell, our buddy Powell, speaking before the market opened. We got all the crude numbers. And then the last day of the quarter and of the month, June 30th on Thursday. Pretty big day. Not only is it quarter end, so everything for final adjustments for quarter and quarterly numbers, but you got core PCE, jobless claims, personal spending, personal income. Pretty big day on June 30th. Then you got the minor Chicago PMI, and Friday, July 1st, so first day of July and the following quarter, you got ISM. So we have a backloaded week, especially with quarter end. So do not get complacent this week. Hey, Jake, halfway through 2022 already. Time does fly. Time does fly. I can't believe it's like halfway through the year already. Oh, boy, just a recap from Friday. Pretty big day. I covered a lot of stuff in the sector overview, too. A lot of these sectors are getting near tops this week. So I'm going to start watching for potential cycle rollovers. Some more towards the beginning, some more towards the end, but you have some potential things to top that could be topping out. So if they've hit targets, my overall recommendation is, again, if they've hit their full targets, you unwind the position. If they are still yet to go, I'd be moving up a stop slightly more aggressively on the sectors that are rolling, or that are closer to rolling over, especially if they trigger that rollover move Monday or Tuesday. Fed watch still 75 basis points, coming back a bit, but I still think they're going to hit that 75 in July. I'd err on the side of being more aggressive in July, and then they can get cautious as the year goes on. We are still in negative gamma, but it is waning quickly. So if we have a continued rally, especially at the beginning of the week, The gamma flip area is just in front of 4100, but right in here it gets so minor that it starts having less and less of an impact, and quarter end is going to have the much bigger impact. All right, and this is also what I'm talking about. S&P cycles at the top, not yet rolling over, close to getting to overbought, but not yet. So could we see a little more upside? Quite easily. We've hit that 50% level, the 50% harmonic from the up and down move. So from the highs on the 31st of May, so the end of last month, to the lows of 17th of June, pretty much mid-month. And now we're wrapping up the month, end of the month, closing over the daily rotation zone. So I'm really watching if we do rally, and not just for tomorrow, but tomorrow and Tuesday, unless we have a blowout rally tomorrow. 39.54 minor, major cluster, 39.90. That's the 62.5 harmonic. And we are still in a clear path move. We did complete this gap fill. Now in the cash, you can see here, there still are some gaps to the upside. We filled this one, but there is still a gap to the upside. And based off the cash, that's about to the close of 4,017. So do not ignore that in the cash. And where would that take us? That would take us definitely on, if we closed above 39.90, that would be a close above the 62.5. And based off quarter end, I'd be then targeting the 50 to the 4,000, so 50 EMA to 4,060. All right, but we're going to have to see based off these cycles how they react on Monday and Tuesday. Hello, Waka Waka. Hey, options, we'll get to Qs in a little bit for you. So, closing above the 50% on the NASDAQ. Next area I'm targeting is about this 12,250. And then the next target above that would be 12,488 into a clear path also here, just in the futures. Oh, you know what? I jumped before I even covered the pullback levels, which we can cover tomorrow morning also based off overnight trading. Will help us qualify it because we're into a pretty substantial clear path move on Friday back down. But my major support's coming in about 38.50 and minor support's coming in about 38.83. On the NASDAQ, on pullbacks for overnight, again, since we're going into a clear path move, this is technically an advanced clear path move. If it does rotate back down, I need to see the overnight trading. But first support on the NASDAQ is 12,007, so I just target 12,000. And then more substantial is about 11,875. That's where it gets a little tricky because there aren't any stopping points to really lean on a pullback. Next targets, again, 12,235 and then 12,476. Yeah, we are just cycles. Again, you see it on the NASDAQ already at the top. Could they stay here Monday, Tuesday, even Wednesday? Yeah, but I'm going to start watching for the rollover move. Okay? So does that mean it has to happen tomorrow? No, it doesn't. Even if we had a pullback tomorrow, we could easily do turnaround Tuesday, push into Wednesday, and then start the larger rollover. So don't get too, especially with quarter end, don't get too jiggity to the downside. We gotta look at those levels. The only thing that does concern me is if you get some of these stronger rollover plays. Again, here's a Dow. You have an advanced clear or a simple clear path all the way back to 30,660 roughly. Now minor, what I'll watch for overnight, 31,271, and then major will be 31,047. To the upside, again, closing above the daily rotation zone into a clear path move. So I'm really interested, 32,050. And then on a close above there, let me remove a couple of these lines up here. We have to go pretty much to the breakdown zone, which is technically up here, but right in front of it, we have this old top at about 32,634. Q and window dressing, I assume this week we should be over. No. we should be over. Well, window dressing will end up, you have but sometimes that can last through at least the first day of trading. And then remember, USA has July 4th the following Monday. So you have limited futures on that Monday, and you have the stocks are closed. So if we don't get a major pullback this week or towards the end of the week, if we don't get some more substantial corrections off these potentially overbought levels with the cycles rolling over, then I will especially watch for things to change starting on July 5th. Russell coming up just shy of the rotation zone. Remember, all these things are in clear path moves. That's why there can still be upside price action. And see, even on the 4-hour in the Russell, you have what we call an advanced clear path move. There's not many stopping points. That's what I'm trying to really demonstrate right now, that could this run even more than expected, even with cycles at the top? Yes, it could. Pullback levels on the Russell about 1745, and then major overnight about 1733. Next key pushing higher 1780, and then majors about 1815. Mike, over the last 14, 15 consecutive months, they seem to run the markets the last week or final days of the month. Yes, there's generally you get the window dressing, especially quarter ends. Why? Because a lot of stuff is published on a quarterly basis, so you get, and that funds only have to show stuff based off quarterly snapshots. So you could roll your portfolio into things you want people to see that you're holding at a quarter end, and then just unwind them the following week. You can also shed stuff you don't want still on your portfolio at quarter end. You can also try to game stuff up out of, that's why you'll start to see rallies on stuff that has been bullish. But then, I'll give you an example. Where do we sit here? Like healthcare. Remember, it tipped into a longer-term sell, and then look at this massive rally in healthcare, up 777 basis points. Why? Because it got to a brief oversold sell-off with this, but look at the juicing in here. Look at the juicing in healthcare, because this actually gets it back. If this can get sustained in the quarter end, and I'm actually expecting it to run up to this 132 level, that really juices up. So if you're holding healthcare stuff, it gets juiced up, and look, you're back to, hey, it doesn't look so bad. Okay? So not only do the stuff that's really oversold positions that still wants to be held can get really juiced into quarter end. DAX, not much here. Just keep an eye if you are on the DAX on a close. Even the next couple days would be an aggressive buy above Thursday's high. Friday did not hit that level, and that level is above 13,137. Why is it aggressive? Because it is against the daily rotation zone. So that's what I'll be watching with the DAX. But again, that has to be kept an eye on closely, because it is slightly lower probability against the daily rotation zone, and you have a major breakdown level right here. Crude, I went through this in the sector overview, still being very patient. No strong bottoming signal here. It did get the aggressive buy on Friday, but I'm just watching for a potential pop and then another rollover play. All right, the first key area then that I'm focusing on is about 109.60 to 110. And if we do go beyond there, about 112, and then a potential rollover play for a push lower. Why? Cycles are at the bottom turning up, so it could run for a couple days higher. Weekly, still coming down. So that's why. And closing back in the weekly rotation zone. So it has not been able to close below the weekly rotation zone since the first cross of it back in December. But when you get mismatched cycles, weekly pushing down, daily pushing up, it tends to dampen the move, and it's against the daily rotation zone, so I'll be not watching for an extended run unless something really changes in the crude market. I don't know if we need. Come on. Natural gas, again, there would be an aggressive buy above on a close above Friday's high, but that would just be pretty much taking it to, for me, to this breakdown area. This breakdown area. So it'd be more like an intraday play to a 1 or 2 day play back to this breakdown area and the rotation zone. Getting into very oversold with cycles at the bottom, so we could see a minor pop in there. Weekly cycles still could have a little more to go, so that would be why I'll be watching for a potential pop and then a rollover play back to more significant support, and that would be right around this breakout zone and the 50% up move and the 50-week moving average. Okay. So that's something there. Gold and silver, there's nothing going on. I'm going to see this potentially spiking bottom move, holding above on the closing basis, key resistance. Yes, this is a longer term double that may never trigger based off the way silver and gold have been trading right now. But there is an aggressive buy on a close above Friday's high. And again, that's aggressive back into the daily rotation zone. By the way, I got asked a couple times, this hasn't been recently, but all right, if you're trying to play this ahead of a buy, that would mean I'd be looking for a breakout play intraday. And as long as it was going to run intraday and close above that, then it could be rolled into an overnight hold position because you have a daily aggressive buy signal. Copper, this is interesting. Copper, Dr. Copper. Pretty substantial sell-off, break below key support. What is interesting to me is weekly cycles still have a little to go, getting into oversold condition, but we could get, again, this would be a short-term bounce play, aggressive buy above Friday's high, back to the rotation zone. Then I'd watch for another rollover play in copper, and I'm expecting at least a return here longer term. You got prior support right around that 50% retracement level, and just below that you have the 200 week. But we have a minor bottoming pattern, not a strong bottoming pattern in there. Notes, we have the pause inside bar on Friday. So if we break down, again, this moved back up, cycles at the top. So if we do pull back 116.25 to about 116.15 is my key support zone before another potential push higher. What changes that for me is if we get a close below 115.23, then I go back into bearish mode. But we could have a pretty significant short-term bottom. We reacted at the first hit with the weekly rotation zone, so not surprised to see a little pullback because that's generally what happens when you get the first hit. But if it can sustain upwards in these harmonics, then I'm watching for the major push next to about 119.09 on the resumptive uptrend. Dollar index, not much to talk about still. All these days inside to the day of the 16th of June. Compared to this, so I'm comparing all these days back to this one day, which was a wide range bar, but they all have lower highs and higher lows. So I'm still watching either for the breakout or the breakdown play. VIX, we had a pretty strong down day bouncing off this harmonic. I'm still watching for still a breakdown. If we start breaking down below Friday's low, I'll be targeting overall back to 25 through quarter end. Let's see. Bitcoin, interesting because it's rallied up, stalling out at the daily rotation zone with cycles coming to the top. So it has not been able to get a pretty substantial rally just yet. So I'm being very cautious, and we do have a potential double top. This is it's a little sloppy, but it is a potential double top, especially if we start breaking down out of this channel. All right. Tesla, then I'll get to the Qs and everything else. Tesla, we continued moving up strongly in the S&P and NASDAQ. It has triggered this double. Still hasn't hit the first target, 142.88. Then, 142, 742.88, 760.82, 778.77. I'm really focused on the first and second targets on this after this little pullback flag pattern, which is broken out of on Friday. The support, you have this little sideways support shelf. So if we start breaking down below about 726, then I'll watch for a potential pullback to 711, and then you have the gap fill from Friday as the next target down. All right, Qs. Yes, you are into a clear path move. Remember, we hit that next harmonic right there. Next, I'm just going to bump these up for the next substantial levels coming into Monday, especially if we gap. So about 298.26, then the closing price, and this is a clear path move. Remember, gaps make a clear path move. You could draw it in because if pretend it opened here next that closed and then closed down here where it opened again, that would be a red candle, so it would look like a clear path move. All right, so minor 298.26. Then I'm targeting the 299.40 to 301.50, and then the major, if it rallies, pretty strongly, we have about 302.70, 302.50. Just go to there to about 304.80. But those that would really cycles at the top, not yet overbought. So can this still run? Yes. But the longer this goes up, I would not, from my perspective, I would unwind some profits at some key levels and then just ratchet up a stop to trail out. Your minor support coming in at 291.75, and then more major would be with the low from Friday area with the 1 hour rotation zone coming in about 287.50. Spiders. Again, you still have this gap above, filling this gap right there. So we could go to forward harmonics now. So my levels for the spiders, 393.58. Then I'd actually target this gap open price. And I talked about that a little bit in weekly sector overview. So you want to tune in why I target those. 394.88 and then 397.07, and then on a really strong continued rally, not yet overbought, but really strong would be to this close of 401.44. Cycles on the S&P are a little farther away from rolling over than the NASDAQ. But if we get a big downward correction move, they can both turn over at the same point, and S&P rallying back to the breakdown zone and the daily rotation zone. So it will be interesting to see how that reacts tomorrow. Does a U.S. ban on Russian gold imports mean anything short or long term? Well, it theoretically should be bullish for gold, but gold, if gold was physically settled with the futures contracts, we'd be seeing very different price action. Because watch the spot market, the physicals spot market. That's why, and that's also why you got to trade. If you're playing physical, it's one thing. It's hard to trade around a core position because of fees and the bid offer spread or the bid ask spread. But if you're playing the futures, is why it's still, you got to trade these things around core positions. And as long as the physical market's holding up, it sustains still a bullish bias. There can be a lot of manipulation, though, in the markets that are cash settled. All right. What else do we want to talk about? Oh, earnings. I forgot to mention earnings. Sorry at the beginning. Earnings. We got Nike after the close tomorrow. Not much on Tuesday. Wednesday, it'll be interesting to see Bed Bath & Beyond, McCormick from inflation standpoint, General Mills from an inflation standpoint. And remember, we're winding down earnings season. Micron after the close on Thursday, and I did go over the SMH, the semis in the sector overview. So not a lot that's going to just rocket the markets, but no, Nike will be interesting. I have not glanced at I did not get to my analysis yet on Nike. Remember, Nike, this never triggered. Longer term before, Nike finished its double bottom or double top from before. This, let me just, it's very, very sloppy. This, I mean, we can map this out. Not my favorite pattern, but it'll be interesting to see how that is, especially with daily or weekly cycles at the top and daily cycles getting there going into earnings tomorrow. Really, on any bullish thing, I'd be targeting up if it does jump about 117 and then 118.76. I don't expect this other horribly sloppy double. It's almost invalid. And then to the downside, if you could almost watch this on the daily as a triple bottom. The only way I'd trade this double would be a weekly close above that. But if we roll over again, then it's a quad bottom, which really starts favoring another breakdown play. WZ, welcome, welcome, welcome. Thank you for being here. Can I check Apple? Sure, if I could type. What did I do now? There we go. Remember, Apple's still a long-term rollover play. Short-term, you still have this gap fill to 142.64. Cycles are getting to top on Apple, so I am getting cautious. So it's aggressively move up the stops on Apple. If you run above that into quarter end, your next targets are about 145.25 and then the 50 EMA 147.65. Just keep an eye. If it starts rolling over, you do have this gap. You actually still have two gaps. This one's not yet filled, and you have this one. So if it starts rolling below Friday's low, it's a real, depending on where you are in it, that's a great area for a tight stop placement. A looser stop placement would be below this close because you could have the gap fill before a little resumptive move. But again, cycles at the top on the daily and close to the top on the weekly. If I had to bet, I'd watch for a little more, even if we paused or pulled back slightly on Monday, I'd watch for a little slightly pause, a slight move higher going into the weekly rotation zone and the breakdown zone before the next substantial potential rollover play on Apple. I'm hungry, but I'm watching instead. Well, that shows your priorities, Coco. And why I say it's still another rollover play, because we do have a massive double top still in play with the next major target, next minor target 127.97, next major 129.59. But remember, you can get these rallies into the rotation zones before those rollovers, and Apple's earnings aren't until the 20th, so pretty much the end of July. All right. I think everybody tuned in on Friday. You had the Microsoft hitting the full double targets. Remember, mega caps and junk. You had Google hitting the full double targets. So can these run higher? But yes, if you didn't get out on double targets, I'd be aggressively moving up stops. So that's where I stand. Yes, thank you, Jake. Enjoy your Sunday, unless I see something else major. Tom stock, you crack me up. All-time high coming after next month's CPI. We'll get lower CPI and Fed prints again. You know my thoughts. You're welcome. New all-time high after next month. You'd have some major heavy lifting to do. You're also going into potential significant earnings contraction. Not saying this can't rally more, but all-time high would be, wow. And Fed can't cut yet. Fed can't start around the cuts yet. You'd have, even if you saw CPI pull back for a month or two, unless it started printing back below 2, you're not going to see them because you could get easily a pause in CPI. And then if they ease off the pedal too quickly, what happens if it spikes again? Then they're even farther behind the curve. So, be very careful with that. People, this has been a juiced market for many, many years. That's why I don't think we're in. And I'm not picking on you, Tom stock, but you still have everything's a dip buy. Everything's still buy the dip. Everything's still buy the dip. It's look at ARK, and I pointed out ARK because I said junk. Watch for a rip your face off junk rally, and and ARK falls in the junk category. It's like saying ARK's going to new highs. So ARK cycles at the top and hitting overbought conditions, by the way. So if you were playing this and it hit the 87.5, so it finished this little run, can it still pop up a little more? Sure. But if you are playing this as a potential junk play, I'd be easily moving up stops very aggressively. All right. With that, I am going to wrap it up. Hope everyone has a wonderful rest of their evening, and I'll see everyone at 8 a.m. Central Time tomorrow. By the way, please come back and leave a quick comment either right after this live stream. And do check out the weekly sector overview. Until then, I'll talk to everyone later. Bye for now.